Test, test. All right. Let's go ahead and get into it. Today is Tuesday. It's the 22nd. So we're gonna get right into price action, seeing what transpired yesterday, and just build off of that. We got 12 minutes to open, so let's see where we can get to. Just looking at the opening so far, see what's transpired. Open my chat. Okay. All right, so let's go ahead and go to the hour and then look at what transpired yesterday. So right off the bat, my eye jumped straight to this expansion up. And from this expansion, I'm seeing that we had consolidation that we broke through, and it looks like it retested here. So you want to have it to where your eye goes to things like that immediately to dictate just where you're at in the market and give you an idea or clue to what's going on. So you have this pretty much this range right here, consolidation back and forth, and you see how we broke it, came back above it. So now seeing this is just giving me basically a foundation to start from when it comes to looking at this structure. So even this bounce, you see it, this consolidation here, but you also have this consolidation here. So if I went and just took it to here and put it at this consolidation instead, see how it lines up here to here. All you're trying to do is make sense of what's going on. And this is what I'm seeing right now. We're just bouncing off of that consolidation. We tried to break through it the first time. The price rejected it, came back above it. We had this expansion up, and then we just retraced back down to the same area, and then we're bouncing off the same area again. So when you're looking at the higher time frame, you're focused on bias. What's your bias for what you're looking for? So my bias right now it'd be bullish until otherwise. So now I have to see, okay, where could price likely go to, and have complications with trying to get to another area. So right here, I see this consolidation here as well, which we already came to, rejected off right here. So this consolidation right here. And this is you getting the foundation. This is you trying to figure out what's going on. This is you not saying I'm taking a trade here, taking a trade there. You just want to see where you're at in the market. So right now, I can see that I'm between two consolidation points. This low one and this high one. So this is between two different ranges. So now that I know that this area can be sensitive. So now I got a context clue on what's going on. So something I like to do as well is I'll take these off. Knowing when I seen there, I'll go to a 4 hour and see if it's the same kind of ideology or same concept. And if you look right here, see this. Here's that consolidation here on the 4 hour. Boom. So seeing this, right? And let's go ahead and title this 4 hour. Okay. So now when I look at that and then I go back to a 60-minute, let's see how that lines up with everything else that I was looking at. And as you see, it's lining up with that 1 hour consolidation that we had earlier. So that would be here, which I had just a minute ago. So you can look at this range here as 4 hour / 1 hour. And all it's doing is just helping me with my bias. That's all it's doing. So go ahead and put this into 12 and lock that. Okay. So now we have that. And we're just building on what we're seeing as the market is opening. So from that, we had this push down, taking out Asian range low. So taking out Asian range low, we also have this whole sweep down and then I'm looking at this whole price leg and just in general. So looking at this whole price leg, I'm focused on this low right here and seeing what's inside of this low. So I see that we have this floor or BSC going up, but this long wick overlapped this wick, which didn't make a an inversion or imbalance. So let's go to a 15 minute and see if we can clear that up. Okay, let's go back 4 hour. Just making sure this goes down. And boom. So this is 1 hour, 15 minutes. Okay. So same thing. Look at how we don't have any imbalance on the 15 minute. So a lot of times when it comes to the 15 minute, you have to look at what perspective you want to look at the market from. Are you trying to wait for a cleaner trade, something that's a lot cleaner? If you're waiting on a 15 minute, you may have to wait a little bit longer, and you may not have opportunities that day. It really depends on the market that you're getting. Now, in this case, when I get a lot of wicks like this, as long as I know where I'm at, I'm okay with going down on a lower time frame. That's why the higher time frame bias is so important when it comes to looking at where you're at on the higher time frame. Consolidation, swing high, swing low. So are you liquidity, higher time frame imbalance? All of those things are important or key to what you're looking for, because you want to use those to navigate where you're at. So even if the 15 minutes not giving you a clear indication of how price is planning out or panning out, you can still go to a lower time frame and not get confused. So now when I go to a 5 minute here, you see we have this super long wick, this down close candle, which is imbalance here, and then basically this is the last imbalance that we made before we started consolidating. So this would have been your inversion here, and then price didn't invert it until it broke this key point right here. So the model would have been right here. This would be a confirmation, and then this would be your initial stop loss, and that's prior to this morning. So inversion, I didn't put it on there because of the overlap, but I'll show you. So inversion. Inversion, confirmation, off a key area with the initial push up, and then from there we get an expansion, pushing up, aiming towards this high, because this is the high that was made after this low was made with this consolidation. And as you see, even with this consolidation here, price went below it, we got back above it. If I put a consolidation range on here, just to show you. Look at that. That's how we bounced off of it, and then we continue to the upside. This is price just flowing, but it's flowing because you were able to get at the right position at the right time. And this is always going to change. But if you can't see it with your own eyes, you don't want to rely on things or tools to always give you the answer. You need to be able to dissect the market, because this is the thing. When you start trying to add stuff to it, you're trying to make it easier for yourself, but you're actually making it more complicated, because you're less reliant on yourself and more reliant on things. That's why I don't use indicators. I just use my eyes, because you want to be able to see a price easy. It shouldn't be super, super complicated. And if it is, you just simply wait. There's nothing to it, because this is a money game. You can't come into it with nothing. You got to come into it with either a skill set or the funds. And if you want to come into it with the skill set and less funds, you got to be more tactical. And you can't be lazy with it. So when I'm looking at price action, it's because I'm doing the heavy lifting of going back to the higher time frame, just figuring out. So when it comes to you marking up, like, we already see what the market's doing right now, and we haven't been on no more longer than 12 minutes when it comes to just looking at our bias. So get to a certain bias. Once you get to that certain bias, then you wait, and then you sit around and wait for your price action to get to you. So in this case, what am I waiting for? Well, I see that a model has already taken off, and it's just like I could look for a sell model, but I'd rather wait for the market to open. I just want to see where the market is at first. That's my focus. So I already know this. So if I want to, I can leave that on and let price get, if price comes back to it. But in this case, I'm not necessarily looking for price to come back to it. If it does, it does. So, send it back. So now, question would be, and I had this question before, is when do I get rid of this? Well, I will get rid of this once I feel like price is out of this range, or it's already gone. So technically, I would look at it from the price leg standpoint. So this price leg here, but you can look at it as this whole price leg. So basically, we're in this range between this high and then this low. That's why this will be a good opportunity, because it's out of a discount already there. So if price doesn't fulfill this high and just bottoms out when the market opens up, then this can probably be another opportunity. It can even go deeper than this and retrace into this one if it wanted to. So it's all depending on what the market wants to do. So let's see how the market opens. Actually gonna go 3 minutes. Hopefully we get better price action today. And it's not everywhere or all over the place. Just wait for good opportunities. All you need is one. All right. So I actually want to keep that on a 5 minute, not the 15 minute. Okay, that high is taken out with a swept. So this high right here is swept. This is 5 minutes. Remember that high was swept. So let's see how price is going straight down to it. And see how aggressive it's being. You have to ask yourself, is the risk worth it if it gets down to here? Are you okay with the risk that it's giving you? Well, in this case, it's saying that at this confirmation, that's at least 16 points. But we just took out this high for 40 points. So that's a 1 to 2. But we just swept the high, so price can very much dig to the downside. So you have to know where you're at in the market as well. So based off the opportunity you want to take, it's the opportunity you want to take. It's based off the risk, because you have to accept the risk, knowing what transpired already. We just swept that high. Did we break it? No, we did sweep it. Nice push to the downside. Start to dig in this one. And you see how it immediately swept the high and then just dropped down, because you know what you're looking for. I wasn't looking for it to go to Asian range high, not yet. Like you want a series of events to get you to that. You don't want to just jump to a conclusion, oh, it should go there because of this. Like, no, you have to see it go there. It has a willingness to go there. So we're inside of this range, and price is staying inside of this range. Oh, this is that other one I was telling you about here. Price can blow through all of this and make all of this invalid, because you still have this high and then this low. back up. Let's look at 3 minute. You see here we got that consolidation right there. So if you're focused on this being confirmation, you want to watch how price is reacting at this consolidation here. Are we rejecting off of it hard? Is it giving complication to this? Because if this candle closes, I want to see how it closes in comparison to the midpoint of this wick right here. And if it respects it. But also knowing that this is a 5 minute confirmation, not a 3 minute. There's that rejection. Let's look at the hour real fast. So yeah, you see on the hour, how we just came right back down, and you got the midpoint of this wick. But look at that midpoint of this wick. We broke above it. And I'll just use this as a reference for me to kind of see where I'm at. There. See how we broke above it, and then we just shot right back down. So price is showing a willingness to want to go higher than just a sweep. And I'm also looking at the midpoint over here. I'm seeing how price closes there. 23,294. And right, it's at that right at the high of that confirmation. Okay, do it as you will. Let me go check on her while that's playing out. I'll be right back. Just kind of watch it play out. But do it as you will. 1 second. transpire. Oh yeah. Make a sense. Makes a sense. So whenever you're seeing stuff like this on the 15-minute and price has slipped something or went for a high, it's going to go for a low. Now, you can have opportunities to where it fails to take out the low and then pushes to the upside. But that's also a risk you have to account for. Because if you had a high swap already and you know it's going for a low, what low? Because price could have very much just went for this low right here and then pushed back up, or went for this low that it just made and pushed back up. That's why I don't jump into trades. You always want to see what transpires. And so a lot of guys was asking me about limit orders. And that's the main reason why I don't use limit orders, because I'm judging character based on how the trade is playing out. Nothing wrong with a limit order at all. A limit order is great, especially even when you're sitting at the market. You can use it to set limit orders or set key areas to where you want to get in or participate in the market. But with me, I want to see how the market is playing out and go accordingly based off of that. And that's key to that. So now we're getting this pushed down, right? Remember. So now I want to take this stuff off because I'm not using this stuff now. So when you're having price like this, remember where we came from. We were just at all-time highs. So is this part of the big retracement that we're going to have pulling back to the downside? Well, let's go look at the higher time frame and see. You see this? This is that consolidation that we're referring to on the 4-hour, and then now we're breaking below it. So does price want to go below here, close below here, and then continue to the downside, targeting this low here? Does price want to close out here and then from here find some type of foundation and push back up? That's all based off what price wants to do right now, but you just have to get in line with it and just simply wait. But the problem is people don't have the patience to, because they feel like it's supposed to happen right then and there. So let that push to the downside. Let that fade out. I want to keep Asian range. Okay, you still see it. Literally went to the high, tapped it, and then pushed to the downside. And then like even with this, let's go 5-minute. And then you look at this range and you feel like, oh, I should have caught this to the downside. Well, you would have had to probably go to the 1-minute to your bid. Take the opportunity to, if there was one. You had an inversion here, confirmation here. So you have all this risk. So 28 points. And then the thing is with that, you have to have a target. So if you're looking for a target below the consolidation, then you're hoping that it breaks consolidation. So you're hoping that it goes through something and get to something else. You want a clear path to wherever you're trying to go. Whenever I'm looking for a trade opportunity, a good one, then I want a clear opportunity or a clear path of it trying to go from here to here. And I have things, I don't have too many things in this way. When you try to see things that's in this way or can get like roadblocks, now you're having basically a high risk trade. You want a low risk trade where it has the least path to get to where it's trying to go. So let's go. You don't want to focus on the 1 minute. Don't get caught on trying to chase this. Because you know from this low is taken out. So all you want to see from here is now what? Consolidation. And then from here, look at this high, this low, and then this new high. And if you looked at it from this entire range, just to see where you're at right now, let's see. There. So straight out of a premium, taking out this high, push to the downside. You want to see your model on your time frame. Do not force anything. If it's not there, it's not yours. And you know what a model looks like. So don't don't confuse yourself and like, oh, it should have popped up. You should have seen that high taken out, inversions out of this price leg. The price gets inverted, it comes back into that inversion, and then we head to the downside. That's what you would have seen. But you didn't get that here. If your time frame is a 5 minute, you don't go down to a 1 minute, forcing yourself to see it. You want to see it on a 5 minute. If yours is a 3 minute, you want to see it on a 3 minute. And if it's not there, it's not there. And that's what you're going to encounter a lot. That you shoulda, woulda, coulda. No. Because even if the model is there, then you got to ask yourself, okay, is the risk reasonable? That's another thing. So don't force yourself into seeing things that's not there or taking things that you don't want to take. Because all you're telling yourself is you're not holding yourself accountable for waiting for the right opportunities. You can have a market that's not your market for 2 weeks. Then what? Are you going to feel like, oh, I've been missing out? Or every time it does something and it's not doing what I wanted to do? This is not your market. Where your opportunities are at, they're not happening there. And that's perfectly fine. And then you can see somebody else that's striving in this market because they're trying to catch that expansion, and they're going to a lower time frame and they're catching the expansion. And then you see what you're looking at, like, I didn't catch it. That's not your market. You're comparing apples and oranges, but you all can live at the same token. It's all the same concept, but there are different ways of looking at it. There's different models. So in this case, this would not be an opportunity that you're looking for because it didn't transpire how you want to see it. You have to have rules for yourself, and if you don't, you're going to chase everything. So as this is pushing down, all you want to do as this is transpiring is just go look at higher time frame and see where it's likely trying to go. Well, you obviously have this low right here, right? This low here on the 4 hour. So you can say 4 hour. So we went and just swept that, but we're still inside of this imbalance here. So now, looking at price, where's the next spot that it can be going to? Where is that? It should be obvious. This is all you're doing when you're trying to figure out what's going on. Just get it in sync. So we got a 4 hour low inside of this consolidation. So let's see how price plays out with that. This is 170 point push. You're coming off of all-time highs, so all this makes sense. And then let's say you're like, well, I was looking for sales, but I was so focused on buys because I was flowing with market structure. Right. This is bearish. Remember, I told you guys in the beginning, you have aggressive sales and steady buys. When sales come into the market, they're super aggressive. And just think about it. We just came off of all-time highs. So this push down makes sense. But if you think it doesn't make sense and it came out of nowhere, it didn't. The thing that you're thinking when you say it came out of nowhere is because you didn't grasp on the opportunity or be able to take the opportunity. And that's not the case. Like, if you go all the way, like I just showed you guys, because and it's fresh in my mind. I just had a student, I was talking about this yesterday, about forcing stuff. Like, you see this, right? And this is all the way on the 1 minute. And then you see this inversion here, and then you see this big old confirmation. And then you see it happen again here. And then you see this, and then you see the risk associated with this one is 29 points. So let's call it 30 points. Where are you targeting to? Okay, so if that was your entry here, then your target would have been this low at least on the top of this consolidation. So that's 19 points, 19, 20 points. That's not even a 1-to-1. So you wouldn't even had a proper target unless you were targeting higher time frame. but you have to be in sync with a higher time frame. Look how the market was transpiring. So this drop came off of this high being taken out already. But this drop could have very much bounced off this consolidation and kept going to the upside like it did here. So just imagine if you would have had the same mindset of looking for a buy here, but this same thing that transpired with this consolidation and then it bounced off of here. So just imagine like this here and here is the same thing that was happening right now, but instead of it bouncing off and doing that, it just broke through. So you have two different ways of looking at it, and it's showing you both ways that can transpire. It's based off of what it's doing for you at your time of opportunity. When you're looking for a trade, within these 2 hours, I'm looking for opportunity. And if there's not one, I'm okay with that. So whenever I'm trading in the morning, like early in the morning, I'm looking for the initial push up, because this push up, the push up prior to it dropping down, that's what happened in early morning, like London going into the AM session. And then you get that AM session expansion. And then from there, we can go into lunch consolidating, or we can go into lunch with a reverse or retracement. But right now, we're back at consolidation. So see how price plays out here. So I'm going to go back to a 15 minute. Oh, and there's something I'm working on too. I was showing a student yesterday, and basically is, so a lot of times when you get to the chart, most people have problem with seeing imbalances quick. And for me, I don't like having a lot of stuff on my chart. You guys know that I don't like having a lot of spaghetti on my chart because it doesn't help with what you're seeing. Now, the thing is I was like, okay, is there a way I can make something to where you can see the imbalance, but it's not on the chart? And I came up with something. I've been working on it for the last couple of days. It's not perfect yet. I'm gonna try to get it to you guys by the end of the week. Let me show you it really quick. So if I go here, boom. So you see this chart right here. This bottom right hand side. So these candles are all black in comparison to the candles that I have that are blue and black. So the reason why these candles are all black is because I got this, which is called 4TW imbalance candle. All this does is highlight the imbalance candle, bullish or bearish, floor or ceiling, busy or semi, green or blue. So instead of you marking the imbalance up as the body or the box, it marks the middle candle as that imbalance candle. So let me give you an example. So if I turn it on, so I can give you guys an example. So that's pushing down. So you look at it right now, you just see all black candles. But if I go turn it on, now it's going to show you all the imbalance candles. That's the middle candle. So not the three candles, it's going to show you just the middle one. So now you know which candles or which middle candle is bullish or bearish. So now, like I said, imbalance here, like this is an inversion right here, because you have red overlapping green for a push up. So I know this is an inversion and confirmation right here. Or I have price pushing up, and then it makes this high, and then this is the last green candle inside of this push up with this price leg. So I know this is the inversion, and then price comes down to it, bounces off of it, we push up again. Now I can look at this green candle, and I know this is the inversion, and I know these candles are down close candles that's creating imbalance. So I know these are going to be my confirmation, and it helps you find the imbalance a lot quicker without having to draw anything on my chart. So I'm going to start using this just to test it out. I was going to use it today, but I wanted to explain it first. But I'm going to change my chart over to this and look at it from this perspective, because I'm focused on imbalance and liquidity. That's the main things that I'm looking at. Everything else when it comes to the bodies of the candles and up close and down close candles, that's cool. But if you look for consolidation, you're pretty much going to find that anyway, because you're looking for a range where price is just sitting at. So in that case, this is what I'm going to be using moving forward. Just building off of that and letting you guys use it or learn how to use it. I don't know if it prints wrong yet. I had it yesterday where it printed a couple wrong candles, so I'm just working out the bugs on that with the code, and from that, just developing that. But this is what I got so far when it comes to that. So that should help out a lot. So I'll be using that going forward. So you'll start seeing my charts like that. Probably about to actually use it right now. Yeah, I should. So I want to get in the habit of using it. So. Not dark mode, sorry. Keep it simple. Keep it simple. And turn it on. Turn it on. Okay. So boom, there we go. So now, just how I explained it, I'm gonna start using it. Okay. So back to 4 hour on this chart. Back to a 15-minute on this. All you're trying to see now is just this low. It's clearly been taken. So we know this low's clearly been taken. So I can take that off my chart. When something is obvious, I'm gonna take it off. Just so because I want less things on my chart. It's just clear expansion to the downside. Think about it. Both days with expansion, just had this clear push up. This one had that 3 minute off of this range here, and then with this one, it's just clear drop down. So let it bottom out. So now I'm gonna watch the higher time frame too much. So 3 minute. Let's see how this plays out. One second. Okay, so clear pushes to the downside. This nice expansion. with this expansion, we got clean expansion, so I'm gonna leave you guys with that for right now. We got this expansion, we got this range that we're sitting in right now. So you want to see how this price plays inside of this range, and then from this range, when the price gets out of that range, if it breaks below it or goes above it, then you go based off of that opportunity. And we'll see what markets give us tomorrow. Whenever we have expansion, you want to wait for that consolidation, and however long it takes, and then take an opportunity from there. So you base it off what you're seeing and just develop off of that. So we'll see how the market plays out tomorrow. And let's go get it. I'll see you guys tomorrow.